What if I told you that the money you use every single day is quietly losing value, even though nothing around you seems to be changing? Most people don't notice it at first because the change doesn't happen overnight. It happens slowly and silently. Right now, the US dollar is sitting at levels we haven't seen in almost 4 years. And no, this isn't just another normal market fluctuation. This move is telling us something important about the global financial system. So let's slow down and explain what's really happening, without complicated language or fear. The dollar is falling against major currencies like the euro, the yen, the Swiss franc, and the British pound. At the exact same time, gold is reaching new all-time highs. When currencies fall and gold rises together, markets are sending a clear message. Because at the end of the day, money is not just paper or numbers on a screen. It is trust. And right now, that trust is starting to crack. So what caused the dollar to fall so sharply in such a short time? It began with fear spreading quickly through the markets. Strong political statements added uncertainty and made investors nervous. Once fear takes control, investors don't wait, they react immediately. When key technical levels broke, the selling accelerated even more. It became a chain reaction that fed on itself. But panic alone doesn't explain everything that happened. There are strong signs that this move was not entirely accidental. The United States, Japan, and China all had reasons for a weaker dollar. Japan needed to stop the rapid fall of its currency, the yen. China allowed the dollar to weaken against its currency to gain flexibility. And the United States benefits from a weaker dollar when it wants economic growth. So instead of fighting the fall, the dollar was allowed to move lower. This kind of coordination is rarely announced, but it often becomes visible in the charts. Now, you might be wondering why a country would want its currency to weaken. A weaker dollar makes exports cheaper and more attractive to the rest of the world. That helps companies sell more and boosts economic activity. It can also push stock markets higher, at least in the short term. From a political perspective, growth always looks good. Now let's talk about interest rates because they play a much bigger role than most people realize. Markets are starting to expect interest rate cuts, even though the economy is still growing. Under normal conditions, this wouldn't make much sense. The reason is simple but uncomfortable. There is too much debt in the system. High interest rates make that debt harder to manage. Lower rates reduce the pressure, at least temporarily. But lower rates also make a currency less attractive. This is another reason the dollar is weakening. Now we reach one of the most important concepts, liquidity. Liquidity simply means how much money is moving around. Right now, there is a lot of money circulating globally. That excess money needs somewhere to go. That's why stock markets keep pushing higher. It's also why emerging markets are performing so well. And it explains why gold continues to set new records. When more money exists, each unit of money becomes less valuable. This is called monetary dilution, and it happens quietly. Gold reacts to this because it cannot be printed. That's why central banks themselves are buying gold aggressively. And that alone should make us stop and think. So does this mean the dollar is finished? No, but it does mean the dollar is changing. The dollar is still powerful and still widely used, but its purchasing power is slowly eroding. And because the process is slow, most people ignore it. That's what makes it dangerous. In the short term, the dollar could still bounce, because right now, almost everyone is bearish, and markets love to move against the majority. But over the longer term, the trend remains under pressure. So what does all of this actually mean for you in your everyday life? It means the cost of living keeps rising, even when your salary stays the same. It means savings don't stretch as far as they used to. It means small expenses start to matter much more over time. This isn't about panic, it's about awareness. Because once you see what's happening, you can adapt. The people who struggle the most are the ones who never adjust. Understanding money today is no longer optional. You don't need to be an expert, but you do need to pay attention. That starts with asking better questions. Why is my money buying less every year? Why do assets keep rising while wages lag behind? And who actually benefits from these changes? These questions matter more than ever, because the financial system is evolving right in front of us, and ignoring it won't stop it from changing. The good news is that knowledge gives you options. Options mean flexibility, and flexibility is what protects you long term. You don't have to react to every headline, but you should understand the bigger picture. Because money doesn't disappear, it moves. And knowing where it's moving changes everything. This is why financial education matters more than ever. Not to get rich quick, but to avoid getting poorer slowly. The dollar falling is not the end of the world, but it is a warning sign worth paying attention to. History shows us that money systems always change. Those who adapt early usually do better. Those who ignore the signs usually struggle later. The goal isn't fear, it's preparation. The goal is understanding. And that's exactly what this channel is about. Breaking down complex topics into simple, useful ideas, so you can make better decisions over time. If this video helped you understand what's really happening, make sure to like it so more people can see it. And subscribe to the channel for more clear and honest explanations, because the financial world is changing fast, and staying informed is the best investment you can make.